Hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, October 31st. Michael Boutros here with you this morning, guys. Aurelian, Mark, Peter, Tom, Ziad, great to see you all in the room to what seems to be the conclusion of a very interesting month. We're trading at some pretty critical thresholds that we talked about yesterday, but we'll go over in more detail today. Obviously, I'm going to start off by telling everyone, as I always do, we're heading into the close of the month. This is a notorious time, at least for intraday trading, to be a little bit more reserved, okay? I'm not going to go too in-depth into it, but just notice that it is the close of the month. We're heading into not only the start of a fresh month, but certainly the cusp of a batch of a whole huge amount of event risk starting tomorrow, obviously, with the FOMC interest rate decision. That's not going to be the major player. We'll talk about that. The real thing is going to be who President Trump finally appoints or who he nominates for the next Federal Reserve chairman. That's likely to be what the market excuse me, takes cues off of more so. But certainly we'll be looking at the statement tomorrow to see if there's any type of shifts. We've gotten some pretty decent GDP data last week. Inflation is on pace with expectations. So we'll see if there's any change to the language. As always, or as we've noted previously, December is pretty much in the bag. So we'll go over again tomorrow the implications for that release. Again, on Thursday is Super Thursday for the UK. We get the UK, or the BOE rather, interest rate decision alongside that quarterly inflation report. And then we wrap things up on Friday, obviously, with NFP. So keep the powder dry. Keep your best trades for later this week. If you do enter into any new intraday positioning, keep it light, lower leverage, and again, be a little bit more meticulous with your entries here. We're likely to see a little bit more whipsaw action today. So with that out of the way, one last piece of housekeeping, a quick reminder. We did move again this week Jamie's midweek strategy webinar to Thursday to accommodate for the Fed tomorrow at 2 p.m. So that webinar will be on Thursday right after the BOE, and you'll get a nice little recap of where we stand in the aftermath of that release. Okay, let's jump right in. First things first, here's what's on the menu for today. DXY, obviously, we'll go over the release or the update from the 29th. So that is the Aussie dollar, Japanese yen, British pound. We'll go over dollar Swissy real quick. Not really interested in it right now, but it certainly came off a very interesting level. Last night's update highlighted dollar CAD, Kiwi dollar, and Euro yen. Also on the list is Euro dollar, obviously. I don't really have a strong opinion, but we'll take a look at where that's trading, and the gold trade, which made a nice little breakout, still holding near-term resistance. Any other questions, trade setups that you'd like to review at any point, or if you have any questions, as always, feel free to throw them on the message board at any time. All right. Now let's jump in. Here's what Sunday's update looked like, and everything was starting the week at a very interesting level. One thing I want to note is that last week, specifically into the tail end of the week, we certainly did see a good amount, a numerous amount of breaks of the monthly opening ranges. That dictates that we look for a late month high. Certainly on all of them, it was a late month break. So while we still want to kind of stick with that overall broader sort of outlook, we just want to caution chasing any of these moves, because certainly while the opening range broke for the month, they came into some near-term resistance. One of those is the dollar index. The other one of those is Aussie dollar. We'll take a look at that. But anyway, let's just jump right into the charts. So here's what the DXY looked like start of the week. You guys have all seen this weekly chart, and we talked about the fact that we opened the week here just below that resistance trend line, or that resistance slope, just a basic parallel off the 2011 lows. Sorry, guys, bear with me one sec. Okay, that's from the 2011 lows, and you can see that basic slope. Okay, break, support, resistance. So this is one of those trades where the monthly opening range did break to the upside. We should be looking for a late month high. It was registered on the 27th. Was that the late month high? I don't know. But certainly I don't want to ignore the fact that we're still trading right below resistance. A breach on top of the highs from last week, and this is the reason why this is a rather simple and straightforward trade. If we were to beat last week's high, you'd have to look at 95.90. You'd have to look back up at the median line here. This is the 38.2 line of the broader range here, and that takes you basically into like 96.60 or so. Not our favorite scenario. Ideally, here, initially, you see a little bit more of a kickback. You'd see momentum is running right into 50. It seems to be holding as near-term resistance there. So the threat still remains for a little bit of a pullback. Now it's the end of the month, and again, this is my hesitation. Well, let me just show you the daily chart first. Here's what we look like early in the week on the daily chart, trading just below that trend line. Again, yesterday saw a nice pullback, seeing a little bit of a drawback here today. It's why, because it's the last day of the month, I wouldn't put it past this thing to spike a little bit higher before it turns over again. Long and short of it is that there's support at 94.03, 94.15. That's sort of the level that we're looking for. Basic 236, the August highs, 100-day moving average, and certainly that was the initial monthly opening range. So that's the near-term support. Intraday, it looked like this as we opened up the week. You know, last week, literally extending a parallel just off of these two lows, off the high, clipped that high on the pullback. This is where we're starting the week, right ahead of the Sunday open on Sunday night, or Sunday evening this was. So we were looking for a little bit more of a drawdown. We're starting to get it. Okay, momentum is not the most convincing at this point, which is why, again, now that it's the last day of the month, I don't really want to get too heavy with it. But I'm still looking for a move lower. You know, even if we were to spike through the weekly open and try to make a run at that high, at the end of the day, if we break that slope, you're looking for that rally way up into 95, 90, 96 as an initial target. And this would be a basic 100% extension off the low. Okay, that's represented by this part right here. So the levels are rather clear. I'm more inclined to look lower. I don't want to press it. If you're going to do anything on the short side here, again, lower your leverage. But the risk is still below that long-term trendline support, now resistance. So the picture hasn't changed. You guys are probably bored of seeing this chart, but I did want to highlight it because the intraday still looks, excuse me, still looks pretty darn clear to me. So keep that in mind. Quick reminder here, I see a couple new names. If you ever want to take a snapshot, there's that camera button at the top of your GoToWebinar screen. Just feel free to click on that to take a snapshot of any of these charts if you need it for future reference. DXY, number one. Number two, Aussie. Here's what Aussie looked like earlier in the week. So, you know, again, one of those trades where we're starting out the week just off of Friday's reaction. In Aussie, if I had to press dollar weakness, this is actually where I like seeing a little bit more of a hold. You're seeing it come back again today, but the major level of support here is 76.32. We've been talking about that level for a while because it stands on multiple fronts as major resistance. Again, or major support. If you look back to the previous update on Aussie, here's what it looked like last week as we were heading into that region. 76.32 into 76.30. You have the 52-week moving average. You have the 38.2 retracement from the advance off the lows of 2016. You have the 618 retracement from the advance off of the May lows of this year. All of those converged on a good amount of slope right around that region. So the daily chart was actually showing a very similar scenario with a basic 618, basic trendline support, again nestled in that corner. On the intraday charts last week, as we were heading to the close of the week, that's the level we were looking to see a hold at. Fast forward, here we are with a bounce right at that level, and we opened the week just below that 76 level, at basic 2618. That actually, Pooja, if you're in the room, there you are. You highlighted this to us last week, remember? So near-term resistance, you saw it pop through. Again, I got encouraged, but here we are with a reversal and taking out the weekly opening range low. So it once again puts the emphasis on this key region of support. So I'm looking for a reaction there. I do want to see a hold above last week's high. If it breaks, this is another one where you're at such a critical level. You know, you look for basically 75.66 on the downside. Almost 100 pip drop. Lower parallel takes you a little bit lower in time, 75.50. So you know the areas to work with. You know the key thresholds that we're trading against. I want to see some sort of exhaustion trade here as we head into the U.S. trade session. I can't stress, guys. Hey, Boo Jesse says yes. I can't stress, guys, again, that the last, day of the month, I'm just telling you from personal experience, and I always have this grievance about it, just because I've gotten stung so many times on the trade desk, and it's different when you're trading with someone else's money, even worse. But it's a thing I've gotten stung at multiple times. A lot of rebalancing, a lot of portfolio adjustments, and you get to see these huge swings sometimes that just don't make much sense. So C7632 hold as support would be encouraging for a near-term turn, at least here in the Aussie. Again, the weekly chart is really what matters. So with all the event risk ahead, I wouldn't even be surprised if we drop lower, spike lower, but we close the week above here. And that's really what matters on this Aussie trade, specifically on this major critical confluence region, is where we close the week. So keep your eyes on 7630. Any questions on Aussie? That was number 2. Pretty clear. You don't have much Aussie data on tap this week. It's mostly going to be cues from the dollar. And again, FOMC and the Fed announcement, which again is slated for Thursday. At least that's what the White House is saying. So should be a decent market mover. All right, dollar yen, number 3. Here's what Yenski looks like. On whole, start off the weekly chart since we're here. Just want to show you this basic trade. You dropped from the yearly open, basically off the December high that you made there in early December. And on the pullback, a basic 618 of the entire decline highlighted the same highs that we've been making, subsequent to the low of the year. Ran right into it, 114.30, came back, ran right into it, 114.30. You moved below and closed below it, but you gapped higher, and a breakaway gap never got filled and pulled right back into that resistance level. So before anyone gets all excited about taking dollar yen into 140, or on that side either, people were calling for 106, just note that we're still in a basic range. And on the larger scheme of things, again, it's always good to do this as we head into a fresh month, just keeping in mind where we are. And the emphasis is all on 114.30 as resistance, that basic 618, the yearly range, aside from it being basic swing highs for the majority of the year. Okay, and that's the level to be. If we do clear that, you look for a run into the yearly open, but at the end of the day, there's nothing really to stop it from going into 120.18, 121. As it stands right now, though, momentum is still holding 60. Okay, with precision, I might add, just below it. And we're still trading within the range. So the emphasis is against that resistance. Daily chart looks like this. Okay. We highlighted this earlier in the week. Here's what it looked like on Sunday, right before the market open. We talked about that, 114.50, 114.30 level being a huge region of resistance, just based on what we just noted on the weekly charts. But also you had basic slope. This formation hasn't been the cleanest, but whatever is with dollar yen. But the focus is on the median line and how strong those reactions have been. And point in fact, if you do look at it, it's been pretty strong. Support, resistance, breakthrough, acceleration, a little bit of a tail, but on a closed basis, support, break, acceleration, resistance, and lo and behold, that same level crossed over that key region last week where we turned. So the focus looked lower. And I still like that trade based on the fact that you even saw building and mounting divergence into all 3 of those high points. So price action making a higher high, a higher high, a higher high, again on a closed basis, while the oscillator made a series of lower highs. So it did shift the focus lower. We're trading at 113.80 to start the week. We're basically looking at targets at 113.25, with the final target being at the basic and objective monthly open that comes in at 112.64. Here's what it looks like now. Okay, so we took out 113.26. It fizzled out, specifically an overnight trade here. You could see it clearly happening in momentum. Here's the pullback. You'd look for start of resistance basically at the weekly open, which converges more or less right along that 50 line. Okay, so we kind of want to see this still hold near 1380, if 1375, even better if possible, for this to suggest that you put in a more concerted near-term high. That being said, folks, at the end of the day, we need to clear 112.64 to validate a reversal. As long as that holds, it's a range trade on the weekly charts and the daily charts. Intraday, or intra-week, you're starting off near resistance you pulled off, respect the weekly opening range. And if we choke this target up to the lows that we made overnight, heading into tomorrow, that's basically right here at the 113 handle, 112.96. So still looking for resolution of this range. Again, the broader advance is at risk heading into this key resistance range. And while that remains key resistance, it is also our near-term bearish invalidation. So like I said, if that gives out, you got plenty of room to the upside into 115, 50, and 116 as just initial topside targets. Questions on dollar yen. This is the one that's going to likely be the biggest reactor to not only the Fed statement, but also what Fed nominations come out of the White House later this week. Any questions on dollar yen? BOJ last night, a whole lot of hoopla. It is what it is. Not really expecting that event to change any of the outlook that we're looking at here. Okay, sterling, number 3, that's number 4. Let's start off on the weekly. Another one that we've been tracking for some time since last week. Here's what it looked like on the Sunday open. The previous week when we were looking at this back on the 25th, we were talking about, where is British pound? Right here. We were talking about the fact that it kind of was looking like it was losing a little bit of steam heading into this 132.70 region, but we still wanted to see an upside above 30.20. And even last night, or it started off the week when we wrote about this on Sunday, I even told you it's been difficult being a sterling bull, but I still like prices higher above key slope support, and that's really, again, more manifested here on the weekly chart. It's a very, very clean formation. The slopes have been offering decent resistance and decent support on both ends of the spectrum. You had the high week reversal close previous to the break that we made, back in September, and that close was perfect support, and it lined up with that parallel. So despite all the downside that we saw over the last few weeks, our focus has been and remains against 30.36, 30.20. It's still sort of the only thing I'm focused on right now, and I kind of like sterling higher above that region. Okay, if it breaks on the weekly charts, it shows room down to even 127.70. So again, one of those trades that it's a key inflection into the close of the month. Be careful here, guys. Be careful. That being said, I still like it. I still like it above 30.20. You saw a nice reaction here in overnight trade. You're seeing a little pullback right now to open up the markets in the U.S. as we head into the open, but I do want to see that preserved. And again, divergence here into these lows as price action made a lower low and close, and the oscillator did not. So let's see if we can't get a flip. Again, my favorite scenario for in the event of dollar weakness, I think the sterling upside and even on the Aussie would be my favorite scenarios. On the account of dollar strength, I would take a look at the euro short. Euro's kind of still in no man's land. It's not really my favorite trade. We'll get to it towards the end of the session, but I do want to see this hold. I do want to see this hold. So on the weekly charts, again, very, very basic, very simple. You want to see this above 130.36. Here's what the daily chart looks like on sterling. And again, even within the confines of the near-term slope, there's that basic 38.2. There's a 100-day moving average. So you still have a gut check, basically, around this region for a hold in pound. Again, the momentum signature starting to look more constructive. Change in behavior. We haven't really been able to clear 50 with much fervor, but at the same time, 40 is holding us support. So let's see if we can't clear this range. Intraday chart looks like this on the pound. Okay. Oh, by the way, happy Halloween. That's true. I just heard someone say that outside. Happy Halloween, guys, for those of you who are celebrating. Here's what it looks like on the 240-minute chart. So again, we started off the week right basically at support. And as I said, one of those trades where you kind of just want to be in it. I don't want to advocate chasing. It's the close of the month, but This is one of those ones where a tight stop against Friday's low worked out pretty well. So don't get too overzealous. The target was the median line here. We didn't quite make it that high. So if it were to open the U.S. trade session and start trading below that initial range lows that we made for Asia or Europe, I would kind of bail on it. Okay, but just probably look to wrap that up if we don't get a scratch to that trend line. Looks like it's losing a little steam here. Super Thursday's on tap. I hope that you get a washout and an opportunity to get back on a better long position in pound. But at the end of the day, it's very interesting to read the commentary. Actually, this is something that came up with one of the projects that we're working on for a new SB add-on is a sentiment page where we kind of can aggregate all the headlines for you guys. So you can come in at one-stop shop and just see all the headlines on the majors without having to go on Google and search every day to get a feel of what the sentiment is. But looking at the pound, I mean, as far as the BOE is concerned, you have a very interesting scenario where inflation is starting to run a little bit hot, and they don't want to fall behind the curve. If they hold interest rates, then the pound continues to kind of be lackluster, fuels further inflation. At the same time, there is a lot of talk and concern about the Brexit and the impact that's going to have on the economy. And the BOC, or the MPC, doesn't want to, they don't want to tighten too much because they want to keep conditions lax just in case there is some sort of Brexit shock. That being said, they're stuck between a rock and a hard place at this point. And there's a lot of people, and a lot of, at least, me guys, I take it for a grain of salt, all these opinions and all these editorials on monetary policy. But looking at it, you kind of see a scenario where they would want to raise near term to stem some inflation and give themselves some sort of cushion to move back on rates if things do deteriorate or if there is some sort of larger Brexit impact on the domestic economy. So it's very interesting to see how this is going to pan out on Thursday. I think if they do hold rates, which is still sort of the consensus, I should take that back. There's actually indication, there are some studies or some analysts, guys, who are calling for a hike. But let's just say they hold on rates. I would expect to hear pretty hawkish commentary. And even if they do hold on rates and that hawkish commentary is disseminated, you could still see, or that still could fuel some further strength here in the pound. Obviously, if they do move on rates to the upside, I do expect further upside near term. So the risk is there. We'll go again over this tomorrow in detail and take a really close look right ahead of the BOE. But just keep in mind that that event risk is impending, and it's followed in less than 24 hours by, again, that non-farm payroll report on the dollar side. So you got both event risks here to play with. I think you'll get plenty of opportunity and volatility, and I'm excited about it. But long and short of it is, I do want to see a constructive bias while above 30-20. 30.36. 30.36 here is highlighted, guys, because of that outside week, high week reversal close. That's 30.36, and that was really what was rock solid support. So just keep that 30.36, 30.20 range in mind as major key support. A break through 32.70 is what we need to get this puppy going, okay? And then 33.34, just to go through the levels with you, besides being a basic 50 of that drop off the high, is the objective monthly opening range, which won't mean anything past tomorrow because we're going to start a new month, but it's still going to be a break I'll respect since the monthly opening range for this month never gave out. Here's your monthly open. You made a low, you tested the highs, and you've been in that range since. So you still respect that monthly range, looking for clearing of that zone to give us that directional bias. Pooja says, sentiment page, nice idea. Yeah, I think so. I am looking forward to it. We're talking to a couple of developers, see how we can figure that out. But just throwing ideas, guys. Your feedback is always appreciated. Okay, any questions on pound? See if we can't get this sucker going. All right. Next up on tap, and I just wanted to really discuss it, just kind of overview. I'm not really involved in this at all, but dollar Swiss. Swissy was something that we were looking at with great interest for some sort of exhaustion, near-term pullback off of that 98.76 level, guys, a few weeks back. I'm not going to go through the whole story again, but we failed. It broke. It invalidated our idea. our idea, long story short, you're looking for a measured objective run on 101.08. We noted that a few weeks back. That's the basic double bottom objective break measured move. Okay, so I do think you still risk that a little bit of a near-term exhaustion trade on the back of this stretch, but you stay constructive above 98.76, which represents not only the 50 of the range decline from the December highs. By the way, we've been in this range for over 2 years at this point, but also the 52-week moving average and basic slope resistance. Former resistance should be support. You stay constructive above here. You're still looking for that stretch into 101.08. Wish I was holding on some longs here, but didn't get the chance to get into this one. So here's dollar Swiss on the daily charts. And then to go over really quick on the intraday charts, another basic reason for shifting our focus so aggressively to the upside a few weeks back was an objective break of the monthly opening range. Here's your monthly open. You set a high, you set a low. That breaks on the 20th, and you're looking for a late month high registered on the 27th. So within the confines of this near-term slope, kind of keeps your focus higher above last week's swing low there, where the median line is. Again, that key region of measured resistance, that 101.08 level right here, and the 764 retracement of the decline gives you this zone here. Doesn't really look like, on a slope type of basis, you would look for that kind of target until early November, second week of November maybe. But that is ultimately the target that you want to see hit on dollar Swissy. So maybe if the dollar does give us that near-term reversal, I'm talking about the index here, that could fuel a little bit more of a pullback here and get us the opportunity to get back in. As I noted, on the weekly charts, 98.76. On the intraday charts, 98.80 is that 50. Just below 98.10, you got the 200-day moving average, lower parallel. On an intraday basis, that's sort of your key support. Now, looking at this at a 30 or a 120 or 240 chart, looks like this. Decent tag of resistance or failure, pullback. Would have wanted to see a larger pullback here to get an opportunity to get back on the long side. At the end of the day, here's your weekly opening range right now, at least the initial one. If we break higher, initial targets would be at that slope. Can't really get excited about chasing this on the long side. If you're holding longs, great. Go ahead and bring your stops up to that swing low and look for a tag of that upper parallel. But to initiate any new longs at these highs, it's not advisable. All right, so something to keep on the radar here. Specifically, if we do get into 108.08, 107.08 rather, 101.08, excuse me, if we do get into that region, that might be a decent area if we're looking for near-term exhaustion, at least on an initial type of scalp to the downside. But until we do, this thing looks like it's still constructive. Questions on Swissy? If I'm not mistaken, give me a sec, guys. I think there was some sort of Swiss commentary from the SNB. Okay, that's tomorrow. So you do get a speech from Fritz Zurbrugg tomorrow. That's slated for November 1st. Okay. Hello, Michael. Happy Halloween to you, too. If we didn't clear the monthly opening range in any pair during our monthly trade, does that mean that we carry over that level, the monthly opening range, to the next month, or we start fresh? Good question, Eman. So near-term price, let me take a step back. Yes, to answer your question bluntly, yes. Okay. If the monthly opening range never clears and you open that next month within that range, you have to still respect the previous month's opening range. That doesn't mean, Eman, that that's going to be this month's opening range. Does that make sense? It's a very I'm trying to break down your question here. It makes sense in my head, but I'm not sure it's going to make sense in your head. So let me give you an example. Okay, well, this is a range that broke. Let's go to the weekly charts. Let me just show you, because this is a good question, and I get it a lot. So let's take the example for dollar yen, okay? Um, you know, here's let's say this was, just erase the time period out of your head. Let's say this was the initial monthly opening range. We made a high, then we set a low, then we made a high. Heading into the following month, yes, we need to respect that range, but it doesn't mean that that's going to be the next month's opening range. So let's say, for example, this is the new monthly open, and we crack higher. Okay, so that shifts your focus higher, and then this fails and comes back and tests the low. Now that's your new monthly opening range. The break that you saw from last month fueled the rally, but now you have to respect the November opening range from that stretch high. Does that make sense, E-Man? Great question. So yeah, heading into the start of the month, if that range were to break, let's say on the 3rd or the 4th, absolutely. You have to respect that range break and you look in that direction. But you still look for that initial move into the November open to offer the November opening range. And then we move forward from there. It says to maximum. Thanks. Awesome. Awesome. Okay. You're more than welcome. All right, so dollar CAD would be number 6 if there are no other questions on Swissy. Here's dollar CAD, and since we're on the weekly, let's look at the weekly. The major level of resistance that we talked about on that top side break, above that critical threshold of resistance that we were looking at, basic trendline support off the 2012 lows. The slope has been phenomenal on both sides of the spectrum. We saw the downside break shift to the focus lower. Here's a key support confluence, the 50% retracement of that advance, and the 50 line for the current operative slope saw a nice rebound. This is where we wanted to see a hold. And you guys know me, I was looking for a resumption of the downtrend. We were wrong. The break to the upside kept the focus back on a move into 129.27. Now, we just missed that last week. Here we are reaffirming it this week. 50% retracement of the yearly range converges on that 50 line right here. Just higher, you have the 52-week moving average near 30.65. Broader bearish invalidation for the broader downtrends all the way up to 34. Not my ideal scenario, not what I'm planning for, base case, but just to keep the broader picture in mind. Again, heading into a new month, always good to kind of keep these broader, larger pictures in view. So what that highlights is that near term, you have some targets in mind: 129.27, 129.30, backed by 130.60 or 70, right around here for that 52-week moving average. Key resistance levels near term. Daily chart looks like this. Oops. That's Swissy dog cat. Here's dog cat. There's the confluence resistance. You saw it, yes, you saw it last week. We just missed it. If we extended a high off the reversal day there, or this is not really reversal per se, but that drop off that swing high that we made off 9.6, that caught the highs there perfectly, and again that slope extends just higher into the 50 line of the downslope that we just looked at on the weekly chart. Upslope resistance and the 50% retracement. So another one where this is actually what I noted to you early in the week is that, or I guess this was from last night, dollar CAD, was that despite this move, the concern on the loonie is that you're still in overbought condition on a daily chart. And what do we always say? That's when the market has the most fuel. Okay? It doesn't mean that we need to ignore resistance, but it just means to me that if I'm trying to call a reversal or if I'm trying to look for the exhaustion trade, we need to wait. We need to wait. We need to wait for the daily RSI to at least start to recover back below 70. I'm very, very seldom will I look to try to fight a rally when we're in overbought condition. Same thing on the downside when we're oversold, because that's when the market has the most fuel. And never take my word at carte blanche, guys. Look at the market yourself and see if it makes sense. And you can see here, since the break below 30 into oversold that we made back in June, it's been a pretty straight shot to the downside. Yeah, you saw some recoveries within here, but wouldn't you just rather be playing the short? And as long as it's an oversold condition, that's what I wanted to do. Same thing on the upside. As long as it's an overbought, and in fact, if you found support at 70, that makes me very hesitant. That being said, resistance is resistance. So maybe not per se today. The monthly opening range break. Here's a perfect example, Iman, of one that worked out perfectly this month. Here's your monthly open. You make a monthly high. You set a monthly low. You check the monthly high. You check the monthly low. Once you get the break, you look for the late month high. Well, here we are, last day of the month, stretching into a high. So I'm cautious for exhaustion, even on a spike higher into the 200-day moving average. Remember, on the weekly chart, we have the 52-week moving average. So, even if we were to spike higher into this region, you still risk a major exhaustion trade. So I'm no longer, again, another one where I would be more favored to play on the short side in the event of dollar weakness. Okay, in the event of dollar weakness. Questions on dollar CAD. Here's what it looks like on the intraday trade. Obviously, on this stretch right here, swing trades, guys, got taken out at break even, so that was a flat trade, no risk, no harm, no foul there. But the exhaustion still looks possible. Still looks possible. And look at the momentum signature on the intraday. Certainly, if we were to push higher here on a close basis, remember. And you would see that divergence, that would be, further indications near term that you look for some exhaustion. But the levels are pretty clear, the structure is pretty clear and neat. And at the end of the day, if you break this at the top side here, you have to respect a rally. Initial targets would be 30.26, and again, 30.70 is going to be that region of which you have, that 52-week moving average. Obviously, on the daily chart, it's also right here, 200-day moving average, or rather slope resistance. So you have a lot up here if we were to break, but I am mindful of exhaustion into this near-term region. Questions on the loonie? Okay. That's number 6. Number 7 is Kiwi dollar. And this also was one that we highlighted last night. So again, no change to any of the loonie levels from last night. We're breaking higher here above 28.60. Could see that 29.27 actually clip before we turn over, but that's sort of the emphasis resistance. Swissy looks like this. Testing the yearly opening range lows. Very clear, very simple. You're at support. If it breaks, Geronimo, you look for a much, much larger decline. Here's a look at the weekly chart that I provided last night, guys. Here's your monthly opening range. If this was a concerted monthly opening range high, you would have expected to see a bigger break than that. It only lasted for 2 weeks before reversing, checking it again as resistance, moving right into the monthly opening range lows. Or the yearly. Keep saying monthly. Now, a couple of interesting areas of support aside from just the yearly opening range lows is the 2016 open, okay, from last year, and the low day close for the year. Both of those came right here, and you could see this break was significant. 70 handle, 70-30 was a big region, not only from a Fibonacci standpoint, but also basic slope or trendline support. Also, the 50 line for the current descending pattern. Resistance, 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 break saw acceleration. We saw support there for a couple of weeks. Finally, an outside reversal week slammed us through. That keeps the broader focus bearish sub 70-30, the 70 handle into 70-30. So as long as we stay below that, you are looking lower, but we can't ignore the fact that we are at basic support and the yearly lows. So the daily chart looked very interesting. Again, the highlighted break of that slope support off the 2015 lows. We even came back, tested it as resistance before moving sharply lower. There's that key support barrier, 68.27 into 68.50. Near-term resistance really doesn't come into like 69.19. That is the yearly open. So you keep that in mind as a very critical area of resistance. Just higher is going to be that median line off the highs. Intraday chart looks like this. So this basic slope that we've been working with off the high, it's not the cleanest thing per se. The 618 line caught the highs pretty nicely here on the advance before turning over, but certainly on the downside hasn't been all that clean. Keeping more of my focus on the lateral levels, once that 69.69 level also converges right on that median line, so it gives us an interesting area of confluence resistance. You know, looking higher, but I want to see exhaustion at one of these two levels for entry. Okay, so I do think the risk, again, this is one of those ones where if the dollar does come off on the weak side, I do think you see some sort of near-term rebound. But ultimately, you still want to look bearish below 70. Okay, so a rally into this region, in my humble opinion, would offer, entries on the short side. You look for a target back into 68.27, but the basic emphasis is you want to see that break to target initially 67.40 on the downside. That's a basic 618 retracement. So here's what it looks like now on the current charts. This is for Kiwi. Okay, you saw the reversal again here, still holding that key near-term support. You know what I mean? We were talking about yesterday on the charts in the update about the divergence that we've been seeing into the lows. This price action made a lower low, and the oscillator made a higher low. Obviously, these, like I always say, these signals below 30 are going to be your weakest. But even when you brought this into a near-term chart last night, even on the 120, it started to show a little bit more of a clear divergence. I do want to see it move higher, guys, but at the end of the day, it's tough to try to call this dollar. So you're sitting at support. Any long exposure you want to take, you kind of want to keep it against that last week's low, and certainly a basic and objective break above the opening range for the week. Last week's Friday swing high would shift the focus, at least near term, back to these levels where we'd start to look for exhaustion again. Okay, the daily chart, just want to highlight on the downside. 67.40, just an initial downside would be the target if we do break. And the broader trend is bearish. It's just that near term, the focus is, do we get a little bit of a recovery here, especially if the dollar pulls back as we would like to see. Questions on Kiwi? All right. That is Kiwi dollar. Last but not least, from last night's update, number 8 is going to be Euro Yen. I know Jamie's been looking at this recently on the intraday charts, guys. We've been on this for the last 2 weeks, ever since the run into resistance, which was a key critical resistance barrier. And that's basically defined by a basic 618 retracement. This is off the decline from the high that you made in 2014. It is also the yearly stretch highs that we made back in September. And this month, it converged on basic slope resistance. Nice little area of resistance here. Wasn't an outside day reversal close. I think the highs were 34.49, 34.49. They were exactly true, but this one was 5, exponential 5. Well, this is just 45, 49. Excuse me, 49.49. 34.49 rather. So either way, it wasn't an exact outside day is what I'm trying to say. But the reversal day nonetheless took us right back into the monthly open. You saw us close there a few weeks back. Or this was, I guess, last week rather. And then the pullback, here's the objective monthly opening range lows. And this is why, as I was noting in the piece last week, or last night, if we do get some sort of corrective rebound, I would want to get back on the short side, ideally near 32.50 if we can get that high. On account of slope on the near term, you have a very nice gradient here that converges on the upslope. And that's just higher. So you can see a scenario, it's the end of the month, some wicked price action. I would hope, to get some sort of corrective bounce here to look for another move to the downside. Here's what it looks like on the intraday. I might as well just go there. So I know Jamie's looking at a little bit of a different slope here. If I recall, I think Jamie's looking at this slope. Whether you're looking at this slope or whether you're looking at the one I'm looking at, it's both highlighting pretty much the same levels. I'm more inclined to work with this slope near term just because of the resistance and then you saw hesitation here on the way down. The break was the actual fueled acceleration. And although we've dribbled down below the 50 line here, the median line comes in right where former upslope. So if we were to get some sort of corrective bounce, that's where I'd look some for resistance. The bearish invalidation level, or the rock solid resistance I'd like to see hold, is 32.83, and that is the October monthly open. All right, so areas of interest for exhaustion, possible short entries. Again, need an objective break below 31.40. It's the former swing highs from back here in August. Converges on the lower parallel of the broader upslope. And that's the break that would really fuel the next downside leg towards 30.68. A good way to be short the euro, in my opinion, if euro has further downside to go, and we're going to go over euro dollar next, but if it does have further downside to go, you know, as opposed to trying to take a too firm a stance on a long dollar trade, I personally would rather be long yen. That's coming from me, guys, so that's very rare you'll hear that. Questions on the euro-yen setup? Here's what it looks like on the 240. All right, so that brings us to euro dollar, number 9. Here's what euro looks like. What's the words I want to use? I don't know how I want to play this, which is why it hasn't been on the update since the start of the week. Here's what it looked like last week. Let's do this. We covered this one right into the close of last week. Here's the Thursday update. So we're heading into GDP and CPI numbers which obviously CPI came in line with expectations. GDP beat expectations with a print of 3% versus 2.6. So we saw some dollar strength. Here's what euro looked like as we closed out the week. The play, in my opinion, was to the downside after we broke 117. Specifically, 117.08 was a basic 100% extension. If this was just corrective, you know, that converged on the slope support and should be, you know, a little bit more of a key barrier. The fact that we sailed right through it really kept the focus lower. So heading into the close of last week, you know, we wanted to know targets right here at 116.16, 116.20, with a measured move taking you down into 115.53. So we took out this target, obviously right here on Friday. We just turned ahead of the next target, which was 115.53. The low is 115.75. So, you know, 14, 13 pips, whatever, before we turned around. I don't know how to play this, just to put it plain and simple with you. There's a couple things that bother me. You know, this turned us bearish with this break. Objectively, forget what Mike Boutros says or his analysis. Here's the monthly open. That's the monthly opening range low, monthly opening range high. The break should have us looking lower into the close of the month. It turned right ahead of where I would have liked to see support. So look, it could be a lowered floor, which is a sign of exhaustion. I'm not ready to do that or make that assumption just yet because it's the close of the month. So I can envision a scenario where it kind of washes out once more, gets us that 1550 clip before we turn higher. You know, the weekly charts, the daily charts are all showing very wishy-washy behavior. Here's the break. Again, you know, you could see in a scenario where the rebound at least takes you back into the 100-day moving average. Former monthly opening range lows, that 236 retracement, that's all the way up into like 116.78, 116.80. But even to try to take a long from here, guys, just stop against down this low is too big of a stop for me. So I'm more neutral here. You know, I put a gun to my head. I would look for a washout lower before a rebound. How I would play it is if we do rebound from here, I'm not going to look to play the long side, but I would look for some exhaustion back near 117, 116.80. That being said, I just don't have a play from the price point we're at right now. Questions on euro? I would love to see a boom and then boom, maybe not even as high as that, but and then for a continued move lower. But you know, this is a formation, guys, that we've been holding since the start of the year. This is all 2017 price action. This pitch. Objective measured, objective head and shoulders break does keep the focus lower. So this is a pair I would like to play on the long side in the event of dollar strength. Again, with the FOMC, the Fed decision as far as the Fed chairman this week, and non-farm payrolls. If we do see a dollar scenario for strength, this is one I'd like to see if we rebound higher to get back on the short side. Questions on euro? It's a bit confusing where we are now, and that's fine. I think there's perfect clarity and structure. It's just how do you attack the trade from this current level and heading into the close of the month. I just wouldn't take an aggressive stance on it. Any questions on euro dollar? Going once, going twice. That's number 9. Okay, here's number 10. Here's gold, number 10. Here's what gold looks like. This is something that we did highlight last week as well. I just wanted to show you, I adjusted the slope. I thought it was in this update. Gold. I adjusted the slope slightly. So this was the one that we've been looking at since last week. Again, basic trendline resistance. The slope here wasn't quite as clean. So if you mirrored support and paralleled that off the highs, it actually looks a little bit cleaner and converged again right around this region. So the basic premise of the trade was we were coming off of a big support structure. The downtrend was looking lower, but we were coming into support on the daily chart. 618 retracement. That's 1263. 1267 was a 38.2, and the monthly opening range lows was just lower. So you want to see a resolution to this range. Here's what it looks like on the intraday charts. Or I guess here's what we look like now. I didn't have an update on this last night. Gold, 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 gold. This is the new slope I want to show you. So as opposed to taking the slope off these highs, if you connect the lows, take a slope or a parallel off that gradient, you could see resistance. You could see resistance, and again here, looks like you're struggling at resistance. So bull flag, maybe. It's off the low, so I really wouldn't call it necessarily a bull flag, but the premise of the trade remains the same, guys. Here's your October open. You made an October low. You stretch into October high. Here's the October low. We're at the bottom of a simple, well-defined range. It just so happens that that range occurs right above a key 618 retracement of the advance. So very clean play, very clean play. My broader focus in gold is to the long side on a longer term stance. The circles you see there denoted on the downside, let me get rid of 1240, but the reason I highlight 1240 is because this is our broader bullish invalidation level. Even if price was to drop into these levels, from the longer term picture of things, if you take a look at the weekly charts for gold, that's critical support. It's the 50% retracement of the entire advance off the December lows, the 52-week moving average, and also basic slope support off the yearly lows from last year's swing low back in December and the low that we made this year in July. All converge right there. So even though we're testing near-term slope support, or near-term basic lateral support, if we break lower, that's sort of the major area I want to see holding gold. So the trade, or at least the focus, is if we near-term break above this channel, or we clear the monthly open above 1280, you look to buy pullbacks. If we continue lower, I'm not really looking to short it, but I am looking for exhaustion at these levels, and this is where I would look to assert a longer-term view or a longer-term long position against gold prices. Questions on where gold is heading. The commodities have been very interesting, and even if you take a look at crude, it's still another trade that's very interesting. This is one that we were following last week, and we were looking higher. We needed to see the break above 52.30, 52.40. That was the region to beat. You had a 100% extension near-term advance there. You had a 786 retracement, longer term from the decline off the highs they made in January. All of that converged right into this key slot. Okay. And we were looking for a resolution last week of this range, both the slope support and that key resistance barrier. tested it, got kind of messy and pulled back, but there's the break last week, late, pullback found support there, we pushed higher. So I am inclined now, the bullish invalidation level got raised from that 51.19 region to the 52.45, 52.40. That's your new bullish invalidation and key support. Regions of resistance on the top side, you're coming up on a 55 handle. 55 into 54.74 is kind of the sweet spot I've been looking at. That's right here. Let me show you, I guess the daily chart will be clearer. You have huge stuff there. You have the yearly opening range swing highs, the 618 extension from the advance off the lows in 2016, 786 retracement. This is the longer term retracement from the decline off the 2015 highs. And just a big region of resistance that I'd be mindful of. So if we do break, beyond this, that's what would take me targets up into 56.50 and such. Near term, what do you do here at the highs? Do you get long at the highs looking for a stretch of $1 with a stop at $3 down? There's nothing to do here if you're not already long, bottom line. You could try to play some sort of corrective pullback on a move below 53.80, but I wouldn't advise it. 53.80 is the early open, which is near-term support. So if you do crack here, you could get some sort of move back to the parallel before you move higher. Again, where we are in time, in the month, and price, not that advisable. Momentum still in overbought condition. I would look to use that pullback to get back on the long. Questions on crude prices? Okay, and that's everything that's on my list. If you guys have any other last-minute questions or trade setups you'd like to review, feel free to post them on the message board now. If not, I will have an update for you tonight. Again, the major event risk starts tomorrow, at least with the Fed and the two-day meeting starts today, but the Fed announcement comes out tomorrow. Again, keep in mind all the event risk on the end of the week, the BOE, Super Thursday, as well as the NFP release. So dollar cross is probably still going to remain in focus for the remainder of the week. All right, guys. So no other questions there. So I'm going to wrap it up. I will see you all tomorrow morning. Again, same time, same place. We'll give you a nice update on what's going on right ahead of the Fed on the dollar crosses once again, and a little preview for the BOE as we head into Super Thursday. Till then, best of luck trading, guys. I'll see you tomorrow. Cheers.